Hello friends, welcome to my channel. This is Patel with the Royal Village Metro, Calgary. I try to bring industry professional who can give us very good insight about the services what they provide. Today we have Caroline Troy from the Troy Valuation Services. So she will try to give us the information about the why we need evaluations. Lender always asking valuation. Client they never understand. This is the amount, this is the valuations. That is correct. But lender always want to make sure whatever they are financing, the value is adding to that purchase price. Now, Caroline Troy has a 17 years of experience in a valuation service, and here she will try to give us insight and out about the valuation industry, career, and few other things. So, welcome to Caroline Troy in our podcast.
Thank you very much for inviting me to your podcast.
Yeah, and I'm sure this podcast is another one of the great value added podcasts for all of you, my friend. So, please tell me about your career in the valuation industry as a valuator.
Well, it begins a long time ago. I was working in retail sales for Wood Gundy and Canaccord Capital, and I went and did my MBA. When I returned from my MBA, I came to investment banking at Raymond James, and I worked for them for several years. And in that time, I learned that I wanted to have some credibility when I signed valuation reports that I was writing when I was working in investment banking. And so I took on the CBV Institute program of valuations, and I was given my charter in 2007, and I've never looked back.
Yep,
Yeah,
you have a very interesting career.
I have an interesting career.
Do you enjoy?
I love what I do.
Right, wonderful, wonderful. So, what inspired you to start Troy Valuation, and how has the journey been so far?
Well, I spent 12 years in investment banking, and that was a lot, and that was enough. And so I decided to start Troy Valuations. I knew that my services were of value, that people need to know what I know, and I was happy to start my business.
Right, okay. So please discuss about the some of the key services that Troy Valuations offers.
We provide expert opinions on the value of a business. We call them business valuation reports. We do this for the purposes of buying and selling a business for this, for divorce negotiations. Whatever you do, don't get a divorce. But if you do get a divorce and there's a business involved, then you may want to have an opinion as to what the value of the business when you're negotiating the equitable distribution of the assets. For litigation, for tax planning, all of these reasons why you might need an expert opinion. So, what makes an expert opinion? An expert opinion means that I've been qualified as an expert to provide an opinion at the Alberta Court of King's Bench.
Yeah.
Yep.
Now, this valuations reports required by the certain professionals, such as bank, some of the merger and acquisitions, solicitors team, and the lenders. So, can you tell me how these professionals require this report, and what is the validity of this report? Let's say appraisal, they have validity 3 months.
Yeah.
After we have to go again and do it that month,
Yeah.
right? Now the home inspections report, every client you have to go.
Right.
Now appraisal report, if you're changing the lender, we have to do some formalities, right?
Mhm.
The other client cannot use that report. Right? So I know what is the liabilities and everything that lender took it, but in evaluation services, I want to take some insight how the professional people are using it and what is the validity of the report.
So professionals will see. You can use the valuation report to negotiate on the purchase price of that business, right? Because the evaluator, myself, I may see things about that business that the buyer or the seller does not immediately recognize. The the client can also use that report to seek financing, and they can take that to their lender, and the lender will say yes or no, depending on the business, of course, and they'll use our report as part of their due diligence. I'm sorry, the second part of your question.
Validity of the report.
Oh, how long will it last?
Yes.
Good question.
Yeah.
About 5 minutes.
About the 5 minutes?
And the reason I say that is, so our reports are tied to what we call an effective date or a valuation date. And what that does is it ties the balance sheet values at that date. So tomorrow, the one day afterwards, there will be maybe a change in the bank account balance. And that means that there's a change in the value of that business. Now, that's going to be a very marginal change, not likely to, it's not of large enough magnitude to require a new valuation, of course, but there can be changes over time. And, certainly on an annual basis, we would seek a new valuation, but it could be even as short as 3 months. And my best example of this is if we were valuing a business that was a hospitality company. And so I'm going to use cruise ships. Let's say we were valuing a business that provided cruising services, for example, at December 2019. We would have given it a value of positive value. But come March 2020, COVID hits, all of those cruise ships get dry docked. They don't move. There's no more business there. Is that value then different at December 2019 as it is in March 2020? And I would argue it's going to be very different, because at March 2020, we didn't know what the world was going to look like.
Yeah, absolutely. Yeah. Now, whenever you need evaluations, are you dependent on different people's documentations, like a CPA or lender's documents or some other things, right? Can you
Yes.
give us some example, please?
Certainly. So we look for 5 years of financial information. So that will be produced by the business's accountants. We look for their tax returns, because I like tax returns. Most people don't, but I do. We look for significant documents that for how the business operates. So if they have a lease, we want to see that. If they have capitalized leases, we'd like to review those. If they have large contracts with a few number of customers, we'd like to review those as well. It's really business dependent, but those will give you some of the high level things that we're interested in.
All right. Okay. So, in what way do you think your approach to business valuation sets you apart from the others in your field?
I think it's probably my transaction experience from my days in investment banking.
Right. Okay.
Yeah.
Yeah, experience always matter. Is this a similar industry or you work in a different industry? So that's like you have worked like a two, three different industry and trying to add value service in the industry. You use that people's experience and you will see that how these people are thinking, how I can put those numbers on that one. Right? Yeah.
Right.
Yeah. How do you ensure accuracy and objectivity in your valuation?
That's a very good question. So, in two parts, the accuracy is pretty easy. We rely on the information that business gives us, and so and we don't deviate from that terribly. There's no reason to do so. And in terms of objectivity, I don't have a horse in the race, so I don't care what the number is. It's just a number on the page. Um, and so I give you what I think is my best advice, and I support that with um, a number of data services for which we subscribe, and you get the best that I can give you.
Right.
Right.
Okay. Now, in this process, how many time you have to dependent on the business owner and associate partners to give the documentations or provide the information?
Mhm.
Because you are not going to get like a one, it's a grocery store, you buy everything from the one grocery store, right? But you still have to depend on different, go to another grocery stores too. So in such a things like how many times and what is the time frame is look like to depend on other people?
Um, so I think what you're asking is where do I get my information from?
Yes, yeah.
Right. So the process for gathering information is we give our clients a list of documents, a document request list. And I wrote this, I don't know, 10, 12 years ago, and I've used it ever since. I updated it a little bit, but generally it hasn't changed. And it is those documents that we asked for. And then once we get that information, we review it carefully and we run the information through our financial model. Once we have that, then we come back to the client with a list of questions because now we know what to ask. The first go round, we don't know what to ask. We just ask for everything and we get what we get. On the second time round, then I'm going to put out a list of questions and I hope to get written responses. And these questions are in general, tell me about your business and your services that you offer and your customers and your competitors and your suppliers. And then it can go very, very specific. And these would be things like we noticed that, for an example, I once had a client. The vehicle expense over the 5 years was $10,000, 10,000, 10,000, 25,000, 10,000, 10,000. So the question to him was, what happened to your vehicle expense in that particular year? And he said he didn't know. He had to check with his accountant. He came back and he said, ah, we held a party at a place called the Cadillac Ranch, and the accountant codified the invoice for this party expense in the vehicle category rather than in a promotional category. Right? So that was a extraordinary event, not likely to reoccur, and we could normalize that expense. So that's an example of how we get our information and from the sources that we get it.
Yeah. I was reviewing one opening balance sheet yesterday and improvement 540,000,
Okay.
equipment 300,000, and vehicle expense 144,000. And
Well, it
I
depends. Was it a trucking company?
no, it's just simple restaurant.
Okay,
And it's
probably.
triggered me lots of questions, and
Yeah.
we have to back and through with her, but we will solve
Yeah,
this one. Yeah,
that
absolutely. Yeah.
that's exactly the kind of question that you should ask.
Yeah.
What?
Now, could you walk us through the process of typical valuation from start to finish?
Sure. So we begin with an engagement agreement that describes the scope of work that we're going to do, and identifies the deliverables that our client wants to see. What is it we're going to provide them? We give them this document request list, and we open up a SharePoint folder on the internet. We call it our document portal, and that gives the client the ability to save their documents into a confidential file that's tied to their email address and has two-factor authentication on it. We then, as I said, we take that information, we run it through our financial model, then we come back with a list of questions. That information exchange can happen once or twice or three times, depending on the information that we get and whether or not we get the answers to the questions that we expect. If we don't, then we have to come back and say, well, I didn't quite understand that. Um, and then we write the report, and as we get near the end of the report, then we continue our conversations with our client, and we sign off on their report. Um, the process depends on the complexity of the report that's required and the complexity of the business. But generally, for a business that's not terribly complex and the report is our lowest level of assurance report, takes 5 to 7 weeks to do. Um, um, Depends on the information that we get.
Yeah.
Mhm.
Sometime my client asked me that valuator will visit the place, and I simply ask them how they will value the business. If you are going to market shopping for car, you're going to see the vehicle.
Mhm.
You're not buying it straight away.
Mhm.
So the valuation team always required site visits. They may need a multiple visit if you have a multiple locations,
Mhm.
and they will wholly depend on the tons of documentations because they are trying to give you as much the valuation of the business, right? Yeah.
This is true for businesses that are very much location dependent. So that would be things like restaurants or retail. But if you're a consulting business, you know, an engineering company or an accountancy, then you're not net the value is not tied up in the location of the business or the operation, the that operating part. Manufacturing, that's again something else that's different. So it really depends on the kind of business.
Right. Yeah. Okay. So we always face challenges. In my commercial real estate practice, I face challenges. So I think you also facing some challenges. So how does the Troy valuation address these challenges?
So the biggest challenge that we have is information. It's that access to information. Business owners know their businesses very, very well. Um, the information, of course, that we rely on largely is financial information. And so as we look at companies that as they get bigger, they get better financial reporting and their financials improve a lot. As the businesses grow smaller, or if they're looking at a smaller business, they, you know, either they do their own accounting, or they have a bookkeeper, and their financial reporting is just not as comprehensive as we would like. And so that does pose a challenge. And the way that we get through that is through a risk analysis. So as companies get larger, the reporting gets better, the information gets better, and we see that that is a less risky company than someone who's smaller and has less financial reporting capability. And so we see that one as riskier. So we manage the information, lack of information or information challenge through a risk analysis, and we apply a discount depending on the company.
Right.
Right.
Okay. Yeah. Now, every business and every country, they measure their how the 5 years and 10 years goes, right? So, about the landscape of business valuation change in Calgary over the years, what you have gained from that one? Do you have something to tell about that one, please?
So valuation is always dependent upon the economic environment in which the business operates. And so if we were going to talk about the Calgary market, then we would say, okay, back in 2014, late 2013, the oil patch was going very, very strong. There was lots and lots of deals to be done. There was lots of money. Money was cheap. Lots of businesses were doing very, very well, and that was very nice. And then somewhere around 2014, the market, the price of oil fell away, and Calgary got very, very quiet. In the same way, we have COVID that came in 2020. That made a big change in a lot of businesses, and that was not just Calgary; it was everybody all over the world. Um, so the economic environment in which a business operates is dependent on it will drive the valuation for that business.
Yeah. Let's say Ontario and British Columbia, they have more businesses
Mhm.
as compared to Alberta. Do you get enough information sources as compared to these provinces
I'm not sure what you're asking.
about the data for the
Uh,
valuations data
okay.
compared to this big provinces where
Uh,
the business is more than Alberta?
no, I think that the data is pretty good across the business. So we're looking at specifically at the business's data, but then we're looking at the general economic information about that in that market that business is operating in.
Right. Okay.
Mhm.
So let's say one laundry business in Calgary. Uh, we may not have sold any laundry business in 3 months or 6 months.
Oh, yeah.
Do you try to get the in a Lethbridge, or maybe in Red Deer, or maybe in Edmonton? Some of the laundry business sold in the last 6 months or something. Do you take that data to use for this valuation?
Yes. So we call those precedent transactions. And the precedent transaction data is interesting because it tells you um, what ratio a prior business sold at, and can we apply those ratios to the subject business. So we do rely on that information, and it's a necessary component of every valuation that we do.
Right. So look like this is a similar with real estate too.
Mhm,
We realtor use the like what is the market heading.
mhm.
Also like what is inventory right now and what sold in a 60 months.
Mhm.
60 days or something, right?
Yes.
So we take that data to analyze what we can sell or what we can purchase.
Right.
Yeah. Okay. Now, this is a very good question. You definitely like it. Can you share a success story where your valuation service significantly impacted a client's decision-making process?
Oh, yes. I've got a couple of those.
Oh, that's good.
So I'll tell you about I had my client wanted to buy a business. I think it was a machine shop, and he hired me to do the valuation. We came back with the valuation. The business broker, so the business's broker, the seller's broker, didn't like my valuation at all. And he called me up and he yelled at me and he said, no, 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 that's wrong. This is wrong. This is wrong. This is wrong. And I went, okay, well, I disagree. And I gave my client my best advice. My client looked at my report and said, okay, I get it. Um, I don't want this business anymore. And the buyer, my client, walked away from the sale. There was another reason why the broker didn't like me very much. And so um, the 2 months went by, and my client went back to the broker and says, okay, I'll buy it now, but I'm going to buy it at a discount. I'll buy it at the amount that Troy Valuations came with. And he was successful, and he got that business at that lower price.
Right.
So that was a success story for my client.
Yeah, yeah. So the valuation is always important, no matter is it real estate or is it the business, because it gives you like so much value-added information. It's give you your decision making very solid, right?
I would agree with that.
Yeah, yeah. Now, so many technologies available, so many brokers providing, business broker providing, just fill out the certain informations and we will give you the valuation, right? And I see client come up and say like, this is the valuations. I say, but you put those numbers. Where did you get these numbers? Oh, I assumed this one.
I like those words. I assume.
Assume
Yes.
this one, right?
Yeah.
But no, that's not work, right?
No.
So let's just talk about like a technology playing your work. There are any tools, software that you are heavily rely on this
Yeah.
technology?
We rely on technology every day.
Right.
So and it's in a variety of sources. It's we rely on a number of databases that give us that information that we need to support our analysis and our opinion ultimately. We One of those, of course, is precedent transactions, but also we look for benchmarks. We look for other similar businesses, and it depends what we're valuing, but we would want to see more information, and we can rely on the technology to get us there.
Okay. Yeah. Now about everyone is s- refresh their skill, right? So how you keeping up yourself, updating your skills and knowledge, and is there any you taking like a refresher course or like association or something like?
So the CBV Institute, which is my governing body, has a continuing educational requirement. You have to do so many years over such a period of time. I think it's 60 hours over 3 years. of which 30 hours must be verifiable, meaning that you have to have attended courses or webinars or conferences or whatever. And the other 30 hours, I think, are they're unverified hours, but that just comes through just plain old work. So that is the way that I keep my skills fresh.
Right. Okay. Now, do you have your website that's providing like a quick valuation of the business?
I don't. I don't have anything that gives a quick
Right.
valuation of
Okay.
the business. No.
Right. Okay. Sure. Right. Uh, we have a very good monthly email subscription from the Troy Valuation. We have tons of information we are getting it. So we will put the Troy Valuation website information in our podcast. So please check that one. Looking forward, what are some trends or developments you anticipate in a business of valuation?
I think AI is, of course, going to make a difference. There's there's no replacing judgment in evaluation. Um, you have to know on what you rely and the selection of factors that you're going to use to determine that expert opinion. But AI is just going to speed up the process.
Right. Okay. As a business owner, what has been the most rewarding part of running Troy Valuation?
Oh, it's fun.
Right. Yeah. Yeah.
It's really fun. So it's financially successful. I like that part. It's also interesting that every business is unique. They all have the same things. They all have revenue and expenses and cash flow and assets and liabilities, but every one of them's different. And you can look at two companies that are exactly the same, and they'll be wildly different. Um, that is one of the funnest things about what I do.
Right. Yeah. Now, your job is a 9 to 5, or you have to work your own space?
Um, it's a desk job generally. I do go and visit clients, but generally it's in my own space, and I'm usually a 10-hour day, if not more.
Right.
Right?
Yeah. Yeah.
Yeah.
But you can work from holiday place too, sometime if you need to.
Right.
Because technology made that simple.
Yeah, technology makes that easy. And that's, if there's anything good that came out of COVID, it is the technology that enables work from home and work from virtual space. There's the communications technology is just revolutionary as far as I can see. I would put it to you, Sam, did anybody ever Skype in 2019?
No.
No, you never Skyped.
No.
But now you're on a Teams call or a virtual call or a Zoom call all the time.
Yeah. So let me add something here that we had this all the technologies,
Yeah.
but we did not
But
the see.
yes, right.
Okay. Now suddenly things comes up,
Yeah.
and it's everyone is like a day-to-day life.
Mhm.
Sometimes clients says like, Sam, we cannot come and meet you. Can we do Sunday?
Yeah.
I said, let's do this one. You don't have to drive all the way to our office, but are you okay 6 o'clock this after evening?
Yeah.
And there's like, yes, but we don't want to come. Let's do Zoom meeting.
That's right.
Right?
Right.
Yes, still people in commercial businesses, they like to come and see you, sit down, and we do have a presentations on bigger screen, properties and everything, like a new development and everything, right?
Yeah.
So this changed whole things.
Yeah, it did. If there was any one thing that came out of COVID, that would be it
Yeah.
for me.
Yeah. Now I have very unique informations required from the Caroline. It's about the joining the valuation industry. We have a tons of people coming to Canada, highly educated people, but they are clueless what industry they can go. So I would recommend them. This is the one of the industry they can think about this one, and this is the like not only like a good, but is also like highly rewarding industry too. So please tell us like if someone wants to consider this industry in develop themselves as a career, what they can do.
Um, so they could go to the CBV Institute, cbvinstitute.ca, And that will give you the courses and the path to attaining that professional designation. But it's a remote study of 3 or 4 years. You learn valuation principles, and then there's so there's the educational component, and then there's the work component. And I'm not sure, I think it's something like 2,000 hours of working as a valuator. And it's a rewarding career.
Right. Yeah. Now, you know, do they kind of do this study in a part-time, or they have to go to the university kind of?
No, it's as I said, it's remote. You can
It's
do it
remote.
you do it at home.
Right, right.
Yep.
So, do they get jobs very easily in a valuation industry
I think that there
while
is
they're doing study?
yes, while they're studying, I think there's a lot of room for growth.
Right.
And again, go to the CBV Institute and you'll see that there are always job postings there.
Right. Okay. Now, Troy Valuation hiring anyone right now?
Not at the moment.
Not at the moment.
Not
Okay.
at the moment.
So, but normally you put the where do you put your recruitment?
We put them on the CBV Institute because we want to get CBV.
Right. Okay. Sure. Um, how can potential client get in touch with you if they are interested to hire you as a valuator?
Go to my website, troyvalue.com, TROY, V as in Victor, ALUE.com, and you'll find us there. Or you can email me, ctroy@troyvalue.com.
Right. And we will also provide that information at the end of this video. Right? So check that one. Yeah. Now, this is the very unique one. While we were setting up and you were talking about with our staff that you are working on some of the project. So it seems very interesting for me too. Can you give me some of that like what project you are working right now?
So I'm happy to tell you about my new project. My new project is benchmarkbusiness.app, and it is a database that has a very user-friendly interface to allow a person who is interested in analyzing, advising, or buying and selling a business to benchmark that business against a very large database of similar businesses. The database has over 241 million businesses in it, and it will give you your financial information and all the financial ratios for that business. So if you go to benchmarkbusiness.app, you will find more information on how to benchmark a business.
That's very interesting to me. I have to look up this one in my weekend. I got the weekend task. So that's all for the today. Caroline, definitely we get lots of information about how the valuator's life, what the valuator do,
Yeah.
the career and experience, right, about your career. And thank you. You advise our friends like if they want to join the valuation industry, where they can find the further informations.
Yeah.
Yep. That's all. Thank you. Please subscribe our channel on YouTube, like on LinkedIn, Facebook, Instagram, and TikTok. That's all.